All right. So when I left you the last time, I was sort of flummoxed because I thought, wait a minute, balancing out here, but when I'm adding these extra entries, things are starting to go awry. Why am I not balancing? If you understand why I'm not balancing, you're doing better than me at this moment, right? So the problem is I took it out of retained earnings down here. What retained earnings is what retained earnings is this? It is ending retained earnings. We do not do ending retained earnings. Do not do ending retained earnings. This is some work I did not delete. And this is some work I did not delete. So we will reconstruct this in a moment. Excuse me. So what I had was this, and it perfectly balances. The problem is this is ending retained earnings. We do not take ending retained earnings. So we're going to do 40,000. 1, 2, 3. And that is going to be applied in this field here. So let's backtrack a little bit, talk about what else we need to get rid of. Start at the top, really. You can get this basic piece down, but you have to remember that things will flow. Your debits and credits will flow as you're debiting and crediting specific subtotals. So, for example, in my consolidation entries, we're going to redo some work. This income is a credit balanced account because it's positive. I need to debit it. Not that much, that much. So we bring it to 9,600. That'll perfectly zero it out as it needs to be because once we report for the consolidated company, we're not bringing over 80% of 12,000. We're bringing over all 12,000. Right. So I need to credit that by 9,600. Now, the rest of the income statement would combine the revenues and the expenses of these accounts together. That one zeros. The cost of goods sold accumulate. The depreciation and amortization accumulate. Other expenses accumulate between the parent and the subsidiary. And if I add these up appropriately, I have my revenues, I subtract off my expenses, I exclude the income from the subsidiary. This is my consolidated net income. And I added this line. Now, this is my consolidated net income, but that indicates that I have some income that is arising from the subsidiary in this. And in order to unlock that piece, I need to just look at the net income line for my work here, where I'm tracking the investment account over time. I'm tracking my NCI over time. That will put into place exactly what belongs to the NCI. Well, not 12,000, even though I'm bringing over 12,000 because I brought over all these revenues and expenses, which come to 12,000. I brought them all over in here. So I added too much because not all 12,000 belongs to the parent. Only 9,600 belongs to the parent. So I have to take out this 2,400 that is belonging to the non-controlling interests of the company. So I reduce this by 2,400, but that can only get there if I debit the total income by 2,400. And that brings me another item within this section of my work paper. It also provides me with the income to controlling interests, which, remember, in this instance, it should always equal out to what the parent would have reported. Okay, because the parent is reporting every piece of income, including its share of the subsidiary, right? Well, when we bring over the subsidiary, it reports every piece of income from that. We have to back out the 2,400 because then it'll come back to the appropriate amount. Now, when we make these two entries, we're making them to income. So that's going to carry over down here. And that equals the 2,400. So I debited income in total by 12,000. And we need to keep bringing those down. And that's a little hard to remember when you start doing these, that if something fed into something I reported in the next financial statement, the debits and credits to it need to reflect what happened before. So 9,600, 2,400 comes down as a debit of 1,200. Now in here, right, I want to eliminate those dividends. Get rid of the dividends. I will mark with highlighted cells the first entries to all these accounts. Notice I don't mark the 12,000 because that's not the first time this was affected. This is just a carryover from this first time that they were affected. This is the first time that dividends were affected. Okay. So then we again do our summation. Of course, the 40,000 will clash against the 40,000, just leaving me with 44,000. Same story here with the net income, just leaves me with the income to the controlling interests of the company, of the consolidated company. And the dividends declared resolved to just the parent's dividends declared. And so we come up with, if we've done everything correctly, we can make the dividends negative, which then just results in a simple summation of these three items. 15,300, which is the retained earnings of the parent. All right, well, I just made all of these entries that eventually resolved into my retained earnings, right? $52,000 of debit there, $10,000, oops, wrong. So $10,000 of credit here. Well, that 52 balanced against this 10 would give me a net debit of 42, which would debit perfectly the amount of ending retained earnings, so that I'm only left with 15,300. But because all of these affected retained earnings, I now have to repeat these two whole amounts down here, 10,000, 52,000. These are not the first time I'm making these entries, so I do not highlight them. I do highlight this guy because I made that right at the beginning. I also highlight my investment in Simon because that's a new entry. It hasn't been recorded yet. I also highlight this NCI. These create my entire consolidation entry. So I would come down here and I would debit income from subsidiary for 9,600. I would debit income to NCI for 2,400. And then I need a credit to dividends to get rid of the subs dividends. And I need one more zero on that. Right. So again, we can check love Excel very quickly. This, no room for fumble fingers. I mean, of course, there's always room for a mistaken formula, but that's easier to check than to continuously sum things and come up to one number and then another number. And then you come up, here's not sure. Oh crap, something is off here. Why did I not reset? NCI is not 18,400. Not sure why that happened. It's 20,400. Now we are even. Debits equal credits. We're good, right? Always check those things out. They save my bacon more times than not for silly errors like I just committed. So this is the total consolidation entry. This will get us through. Now, there's some other things we need to adjust. One thing that we need to adjust is what I talked about at the very beginning. Going back to this paper, remember the note payable and the note receivable. Paul owes Simon $2,000 on account. Well, if Paul owes Simon, the two companies, one company owes, the other company is due, the consolidated company can't owe itself money. So we're going to credit the accounts receivable by 2,000 to get rid of the receivable that Simon has, and we're going to debit accounts payable by 2,000 to get rid of the payable that Paul has. That'll set those to right. Now, the other thing we need to do is get rid of the accumulated depreciation at acquisition. At acquisition is so important. These were made just now. They weren't made further up the sheet, so they're new. At acquisition is so important because thereafter, we record all the accumulated depreciation that the subsidiary records. So we want that on the consolidated sheet. We just don't want anything that happened prior to consolidation. Remember, we balance that 30,000 off with a credit to PP&E so that the overall book value doesn't change. Then we can merge across as we have before. All right. This would be the consolidated accounts reported at the end of the year. We do have to make the journal entries for the new pieces I just put in. So we would come down here, the ones that I had deleted, accumulated depreciation needs to be debited by 30,000. PP&E credited by 30,000. Accounts payable debited by 2,000. Accounts receivable credited by 2,000. Right, and now we are all lined up, perfectly consolidated, showing the appropriate items. I do think it's important you know what these three items are called and the relationships that you see elsewhere in the statement that always ring true.